I used to be a losing trader. I mean, a really bad one. I tried everything. Dozens of indicators, complex chart patterns, trading at all hours, but nothing clicked. I was so close to quitting for good. Then, I stumbled on a ridiculously simple method that flipped everything on its head. It involved ignoring all the noise and focusing on just one 5-minute candle at the exact same time every single day. This one simple strategy took me from losing money to eventually having a month where I cleared over $78,000. And in this video, I'm going to show you exactly how it works. Let's first analyze why we lose trades. We're taught that more is better, right? So we plaster our charts with so many indicators, RSI, MACD, Bollinger Bands, that you can't even see the price anymore. All this leads to is analysis paralysis, emotional trades, and a blown account. We've been led to believe the market is the enemy, but it's not. The real enemy is complexity. Alright, so what's the fix? It's a classic strategy called the opening range breakout, or ORB. It all comes down to one thing: the very first 5-minute candle of the New York market open, from 9:30 to 9:35 a.m. Eastern Time. Why that candle? It's important because it captures that first big burst of volume from the major institutions, giving us a super clear support and resistance levels to trade against. Let's understand the strategy first. You should already be at your trading setup before 9:30 a.m. Eastern Time. Your chart should be clean, and your focus should be on a single instrument. No indicators and no distractions. Set your chart to the 5-minute time frame. When the market opens at 9:30, do nothing. You are waiting for the first 5-minute candle to fully close at 9:35. As soon as the first 5-minute candle closes, quickly mark the high and the low of that candle. These two levels now become your support and resistance for the session. For this strategy, these are the only two lines you need on your chart. Now switch your chart to the 1-minute time frame and wait. Your job is to watch price approach either support or resistance. You are waiting for a clear breakout, not a wick and not hesitation. A valid breakout must close beyond the level, not just poke through it. The candle should have a strong body and show significant volume compared to recent candles. Here is the mistake most traders make. They enter immediately when the breakout candle closes. Sometimes this works, but most of the time price pulls back and stops them out. But you are not most traders. You wait for the retest. After the breakout candle closes, focus on the very next 1-minute candle. If that candle closes back inside the opening range, the setup is invalid. You do nothing and wait for another breakout. If the candle retests the level and closes outside the range, this is your confirmation. The moment this confirmation candle closes, enter the trade in the direction of the breakout. Set your stop loss just beyond the opening of the breakout candle. Set your take profit at a minimum 1 to 2 risk to reward, and ideally 1 to 3, when volume and momentum support it. This is how you trade with structure, patience, and consistency. Before we move to the backtest, let's talk about something critical: your broker. This strategy depends on accurate price data and fast execution during that 9:30 to 9:35 window. A broker with slow fills or poor data feeds will kill this method before you start. That's why I recommend visiting Brokercheck, where our team has reviewed top brokers so you can compare them side by side and find the one that best suits your needs. The link is in the description below. Now, let's backtest this strategy so you can get a clearer understanding of how it performs in real market conditions. Here's the first 5-minute candle starting at 9:30 a.m. on Wednesday, January 21st. We mark its high and low, then switch down to the 1-minute time frame. See this green candle here? It breaks out of the range, but only by a very small margin. Watch what happens next. The following candle closes back inside the zone. So this move was invalid, and we do nothing. Now look here. The same thing happens again. This red candle closes outside the zone, but again, only by a small margin. And once again, the next green candle closes back inside the zone. Another invalid setup. Now watch the third attempt. This time, the candle closes outside the zone with prominent volume. This looks promising. Get ready and closely watch how the next candle closes. Perfect. The next candle also closes red, staying outside the range. This is our confirmation. Immediately enter a short position at the close of this confirmation candle. Set your stop loss at the opening of the breakout candle, and set your take profit at least 2 times your stop loss distance. This is a valid trade setup with proper confirmation and risk management in place. And that's it for today. Remember, no setup is 100% accurate, and that's okay. With practice, you'll learn when to trade and when to sit on your hands. If this video helped you, smash that like button, subscribe to the channel, and press the bell icon to stay updated with our latest content.